lay the groundwork here for audit readiness. And when I think about the amortization schedule for leases, every single number should be able to be substantiated. And some of that may come directly from the lease, maybe lease payments, but a lot of that is coming from outside of the lease. So I know it sounds crazy, but the possession date, sometimes that is not in the lease at all. They may have a target possession date, but that doesn't actually mean that you've gotten the keys to the castle at that point in time. So you want to be able to evidence when you're gaining access to an asset. Is it a landlord letter? Do you have an internal email saying, yep, got the keys today, we're good to go? Or do you have, maybe it's a piece of manufacturing equipment and you can evidence when that asset went into use. But depending on the asset, you may have different types of support. And then another one too is lease term. And I actually think this is one of the biggest assumptions, because when you're reviewing those options of the lease, this could have a huge impact to that initial lease liability and right of use asset. Because if you are saying you're going to or you're reasonably certain to renew, and that lease term goes from 5 to 10 years, that's going to be a pretty big difference in that lease liability and right of use asset. So having the ability to substantiate whether or not you're reasonably certain to execute those options, whether they're termination options or renewal options, but making sure you have some thought process there. Oftentimes you're having to talk to the business owners that are responsible for that asset to really figure out, with certainty what the plan is. The discount rate, kind of touched on this, because it's so subjective, want to make sure you have some documentation buttoned up there. For the lease classification, there are elements where you are calculating things. So for if the asset is more than the fair value, or like of a greater than 90% of the fair value, or greater than 75% of the useful life, then that may trigger it to be a finance lease versus an operating lease. So a lot of times, even though you may know in your heart a lot of real estate leases are operating leases, that you still have to calculate and prove that out to make sure that in fact it is a operating versus a finance lease. So having that kind of all written out. Lease incentives, we don't have that crystal ball. We don't know exactly when we're going to be receiving those lease incentives that are payable. So figuring out, okay, most of our leases get it within 6 to 12 months, or to go in 9 months, or figuring out what approach you're going to take, if it's on a portfolio level or individual lease level, and kind of documenting that. And then the last piece here, this is not really an assumption, but more of a financial statement assertion. And it's, how do you keep ensuring that your lease population is complete? Did you perform a review of all your non-software recurring expenses and make sure that each one of those expenses was covered? Did you survey your employees? Again, how are you making sure that we are capturing everything that we have at the company? That's a lot of information, but wanted everyone to keep in mind that, again, every number that you're about to fill into that amortization schedule needs to have some sort of level of support for it.